Good evening, Garage Gang. You know what time it is. Nightly market recap. And yes, it's me, Avatar John, the market mechanic. And yes, I ripped today down to the frame so I can tell you exactly what happened. Because tonight, the market didn't move, it malfunctioned, it glitched, it smoked, it blew a gasket doing 200 on the freeway while the driver was asleep at the wheel. We watched Bitcoin get thrown down the elevator shaft like someone cut the cables. Ethereum and Solana slide across the track on their roof, sparks flying, scraping paint off the asphalt. Whales backed up the truck while retail bailed out of the vehicle without checking if traffic was coming. MicroStrategy walked right into the burning garage and said, "Is this where the discount rack is?" Swift is flipping the switch tomorrow on brand new global payment rails, a $5 trillion per day engine upgrade happening quietly in the background while people argue about football. Trump went on camera talking peace deals and nukes in the same breath like he was ordering lunch and ending a war simultaneously. AI went full horror movie, from ghost intelligence essays to teddy bears giving kids answers that would get any human banned from society. And you're sitting there like, what the hell did I just live through today? And here's the part you need to hear. While the regular guy looks at his phone and says, okay, cool, it bounced back, he has zero clue that Bitcoin and TradFi just blew a fuse together. Like someone crossed the positive and negative terminals on a running engine. Zero clue the bounce wasn't confidence. It was the dead cat trampoline effect. Zero clue Wall Street and crypto synced volatility like two overloaded circuit breakers popping sparks at the same time. The regular guy sees a green candle. The garage sees the electrical fire behind it. And yes, we know exactly why you're really here. You want to know what XXX saw. You want the trench story. You want the zombies. You want the plays. And ladies, yes, he is single. But calm down. This man is married to volatility. He doesn't do dates. He does candles. Before we fire up the engine, tag your coworker, the Cardano beast, the guy who probably has Charles Hoskinson's face tattooed on his left cheek. Tell him the garage is live and the market mechanic is here with the full teardown. Now do your part. Smash that like, hit follow, share this with every degen who panic sold the lows. This is not the steak. This is the sizzle, the ignition, the open throttle. The show starts right now. Let it rip. All right, Garage Gang, let's talk about how this whole firestorm actually started, because it didn't begin today, and we know yesterday wasn't just bloody. It was catastrophic. Over $1 trillion got vaporized out of TradFi in a single session. That's not a dip. That's not volatility. That's the global economy blowing a tire at 90 miles an hour, sparks flying, car skidding sideways, every analyst whispering the one word they avoid like the plague: recession. That was the air in the room. That was the pressure building under the hood before crypto even woke up. And then came the headline that lit the match. Morgan Stanley stepping forward and saying, loud and proud, December rate cuts are off the table. No hedging, no softness, just ripping the hope bandage right off the market's face. That's when the spark hit the fuel. Risk assets flinched. Stocks staggered. Crypto tightened up. Everyone braced for the next shoe to drop. And that shoe wasn't dropping in New York. It was dropping in Asia. While America slept, while California was drooling on the pillow, Asia woke up angry and came in with a blowtorch. 4 a.m, California time, right when the house is silent and your brain is running on fumes, Bitcoin cracked below 81,000. Not gently, not slowly, but like someone kicked its legs out from underneath it. This wasn't a dip. This was an engine fire in a tunnel with no emergency exit and no fire crew on standby. And let me keep it real with the garage. The real John, behind the scenes, was up watching this thing unravel live. Heart pounding, palms sweating, pacing in the dark like a man trying to negotiate with destiny. Finger hovering over the sell button, wrestling with every voice in his head. Am I delusional? Do I get out now? Is this the bottom? Or is this the trap before the bottom? And then the worst part hit him. He realized he forgot to throw the long in. That sickening feeling, the mix of panic, regret, and total exposure. That's the moment you question everything. He took a breath, looked at the chart, looked at the price melting through 80,400, and whispered, "Screw it. We're burning the boats. No going back." And right when he accepted that fate, right when he embraced the fall, right when BTC looked like it was ready to jump straight into the mid-70s, the headline hit. 7:30 in the morning, New York time. Terminals lit up. Algos jolted awake. Feeds exploded. John Williams, the New York Fed president, a permanent FOMC voter, Powell's quiet right hand, steps up and drops the sentence that changed the day. There is room for a further adjustment in the near term to the federal funds rate. That's Fed code for, yes, we can cut soon. Instant reaction, zero lag. Cut odds spiked from the mid-30s to the 70s. Yields dumped. NASDAQ ripped. Risk on snapped back like a tow cable tightening. And Bitcoin, the same Bitcoin that was collapsing at 4 a.m., suddenly caught air like a fighter rising from the canvas. 81, 82, 83. Candles reversing like someone flipped gravity. Real John sat there in disbelief, watching the same market that tried to murder him 20 minutes earlier rocket upward like it forgot it was dying. And then, the moment that sealed it, Bitcoin broke over 84,000. Clean, strong, defiant, like a warrior climbing out of a grave and asking who else wants smoke. He leaned back, heart still punching through his ribs, and said, "Holy shit, we survived." This was not a bounce. This was not a recovery. This was a resurrection caused by a single Fed sentence rewiring the entire market in real time. That's the full picture. That's what you missed if you weren't watching yesterday. That's how the match lit the tank and the comeback hit the charts. That was gear one. So that's where the panic stopped and the analysis started. Because once the Fed flipped its tone, once that oxygen hit the system, once Bitcoin sat up on the stretcher and acted like maybe it wasn't dying after all, the market didn't calm down. It reorganized, it repriced, it rewired itself in real time. This is the part most people never see, the part that separates the garage from the tourists. The pivot didn't erase the damage, it exposed who actually understood the game. While retail was wiping sweat off their forehead thinking, okay, it bounced. The whales, the desks, the algos, the institutions looked at each other and said, all right, new script, new direction, let's go. Because the second Williams and Moran turned dovish, the entire financial machine had to reprice. Not next week, not tomorrow, immediately. And that's what happened. War rooms from New York to London to Singapore all did the same thing. They paused, they recalculated risk, and they rebuilt positions from the ground up. You could practically feel the shift through the screen. Every asset class had to adjust to the new tone. Retail didn't get that memo. They never do. They woke up, looked at the chart, shrugged, and said, looks like it bounced. No clue why. No clue what it meant. No clue that they slept through a literal macro reboot. But the smart money, they didn't flinch. They didn't panic. They weren't debating exit plans. They were loading. They were rotating. They were repositioning. Because whales don't trade candles. They trade tone. Exchange balances dropped. OTC activity lit up. ETH withdrawals surged. Sol rails got juiced. Stablecoins printed like the morning press run. It wasn't dip buying. It was reallocation, repositioning, realignment. The macro wiring harness got rewired at 7:30 a.m. and everything plugged into it had to adjust. And that's the part most people miss. They think the market moves on charts. They think the market moves on headlines. They think the market moves on vibes. No. Markets move on expectation, and expectations just flipped dovish, hard. That's why Bitcoin didn't just bounce, it reversed. That's why ETH didn't just recover, it stood back up. That's why Sol caught traction after skidding across the asphalt all night. Why AI stocks perked up. Why tech indexes suddenly stopped bleeding. Why bonds exhaled. Because tone matters more than numbers. Intent matters more than prints. Posture matters more than data. Williams changed posture. Moran confirmed it. The bond market agreed. Everything else fell in line. Short-term fear met a long-term easing backdrop, and that combination creates violent reversals that wreck anyone who doesn't understand how liquidity actually moves. This is where the panic ends and the understanding begins. This is where the garage separates itself from the crowd.
All right, Garage Gang, let's talk about the elephant in the room. And if you don't know what I'm talking about, you're about to find out real fast. ISO. Those three letters that half of crypto jokes about and the other half treats like a religious prophecy. But here in the garage, we don't worship, we don't hate, we don't LARP. We understand ISO 2022 is the new global messaging standard for moving money between banks. Not money itself, the instructions that tell money where to go. The system we've been using, the old MT messages, was built in the 1970s. And back then, MT was a masterpiece. Perfect for that world, perfect for that level of complexity. But now, it's like trying to run TikTok on a rotary phone. MT was built for paper statements, manual reconciliation, and bankers wearing wide ties and smoking inside the building. It wasn't built for AI compliance, instant settlement, blockchain interoperability, terrorist financing detection, cross-border speed,
or real-time global oversight. The world evolved, money didn't. MT stayed frozen in time. Banks started duct taping it, patching it, forcing it to do things it was never meant to do. And like a 72 Pinto on the freeway, it kept blowing out under pressure. Transactions missing data, payments stuck for days, frauds slipping through the cracks, sanctions systems misfiring, audits failing, regulators getting angry, customers losing trust. The truth is simple. MT doesn't work anymore. And that's why tomorrow matters. Because tomorrow, SWIFT, the backbone of global banking, shuts off MT messaging for cross-border wires and flips the switch to full ISO 20022. No coexistence, no fallback, no maybe later. ISO becomes mandatory. Think about that. A system that moves over $5 trillion a day is replacing its entire language overnight. And that's why XRP Maxis are pacing the room like it's the night before the world resets. Now, let me be clear. We're not haters. We're not dismissing anything. Jack Claver isn't some YouTube clown. He's intense. He's early. And honestly, he convinced me enough that, yeah, I hold a bag. Not because I'm expecting a $1,000 candle, but because if he's even 10% right, that bag pays for my ranch, your ranch, and 3 more for the kids. So let's break his theory down clean. No bias, no smoke, just real analysis. Jack sees the rails changing. Correct. Jack sees global liquidity issues. Correct. Jack sees Ripple quietly building corridors. Correct. Jack sees ISO-compatible architecture. Correct. Jack sees a world moving towards structured, automated, machine-readable payments. Correct. Where Jack stretches it is the leap from XRP fits the new system to XRP becomes the system. That requires a global liquidity event, coordinated adoption, and central banks agreeing on the same asset at the same time, which historically only happens under intense crisis. Possible? Yes. History is full of resets. Probable tomorrow morning? No. The rails are being upgraded, not detonated. But here's the piece everyone outside the garage gets wrong. The MT ISO flip is not about XRP mooning. It's about the world finally installing plumbing that XRPL can actually plug into. In the old world, XRPL was speaking English while the banking system was speaking Morse code. Tomorrow, for the first time, they'll be speaking the same language. That doesn't force XRP, but it doesn't exclude XRP either. And that is why the garage pays attention. Not because of fanboy nonsense, but because now we're finally entering a world where modern settlement assets like XRP are technically compatible with the system that moves the money. So yeah, we do our own homework. We don't pray for moonshots. We don't get hypnotized by conspiracy charts. But we also don't ignore asymmetric upside when the rails are literally being replaced in real time. And I'll be real with you. If Jack's theory ever actually hits, if the dominoes fall just right, if the liquidity crisis ever forces banks to look for a fast, neutral bridge asset, I won't lie, I'd be pumped. Because we didn't follow the cult, we followed the plumbing. We didn't bet the farm. We just kept a bag on standby because sometimes the universe drops you a gift. And tomorrow's the kind of day where you pay attention. Not because magic is coming, but because the world is upgrading its wiring and the garage doesn't get caught sleeping. All right, Garage Gang. Now that we've talked ISO, XRP, the new rails, and the whole elephant in the room, let's move into what the charts can't hide, what no influencer can fake, and what every real trader should look at before they hit buy or sell on chain. Because charts lie, influencers lie, narratives lie, even price lies when leverage is involved. But the blockchain, it snitches on everybody. Here's what the data showed today. Not opinions, not theories, but the receipts. While retail was panic selling like BTC was going to zero, the whales were quietly doing the exact opposite. Bitcoin reserves on exchanges hit multi-year lows. People weren't sending coins in to sell, they were pulling coins out to lock them up. That's long-term hands. That's conviction. That's the difference between tourists and killers. At the same time, OTC desks, the private back alley of institutional accumulation, were loading up inventory. Not dumping it, loading it. Rough numbers, over 100,000 BTC moved around desks and private wallets while the public was screaming, "It's over." Those 2010 era wallets that woke up today, they didn't send coins to Coinbase to panic. They sent coins to manage positioning, to rebalance, to hedge, to rotate. They moved like professionals, not like people on tilt. And Ethereum? Same story, different flavor. Over 150,000 ETH was pulled off exchanges in a matter of hours. Coinbase saw two enormous withdrawals, 70K here, 70K there, straight into fresh wallets. And then OKX lost 180K ETH to self-custody. That's whales saying, "Thanks for the dip, we'll take it from here." These aren't baby wallets. These are deep pockets. Funds, long-term players, people who run spreadsheets while the rest of the world runs panic. Solana? On-chain activity didn't die. Sol memes collapsed because leverage blew up, not because the chain lost momentum. Sol real usage stayed hot. Sol staking ETF inflows stayed consistent. Sol rails stayed strong. The degens got wiped. The infrastructure stayed intact. And then you had stablecoins, which tell you exactly where the future money wants to go. 500 million new USDC minted. Another 250 million USDT sent to Binance like someone refilled the rocket. Stablecoins don't lie. They move where opportunity is forming. While the panic sellers were shrinking their accounts, the people who actually understand liquidity were reloading the chamber. That's the garage read. When the noise gets loud, the blockchain gets quiet. And in that silence, the truth shows up. And the truth today was simple. Retail puked. Whales ate. Institutional wallets loaded cold storage. Stablecoins stacked up. And every metric that matters said the same thing. Fear was temporary. Smart money was ready. And the entire market just transferred coins from the weak hands to the strong ones. You want to know where the next move comes from? Right there. All right, Garage Gang, let me say something that every trader knows deep down, but almost nobody has the balls to admit on camera. I don't care how many lines you draw. I don't care how clean your fibs look. I don't care if your RSI is flashing red or your MACD is screaming. There isn't a chart pattern on this planet that could have told you yesterday, with a straight face, yeah, we're about to swing down $7,000 from here. Nobody can do that. Nobody. Why? Because crypto didn't puke because of TA. It puked because the entire global environment was vibrating like a cracked engine mount. The world was tense. Everything felt uncertain. People didn't trust their governments. They didn't trust the data. They didn't trust the headlines. Bond markets were screaming. DXY was flexing. TradFi had just lost $1 trillion. Asia session was lighting the order books on fire. Macro was wobbling. Politics were messy. Sentiment was fractured. Every trader you know was one bad candle away from losing their emotional stability. That's why we didn't drop because of technicals. We dropped because fear was the TA. The market wasn't reading charts. It was reading anxiety. That's the part people forget. Bitcoin doesn't just measure price, it measures human stress in real time. And yesterday, human stress was off the charts. So while everyone was trying to interpret indicators, the truth was simple. Crypto fell because the world did. And if you want to understand why today felt like a glitch in the matrix, you need to look at what was happening in the other machine, the one taking over everything. While humans were panicking, while traders were melting down, while markets were screaming, AI didn't flinch. AI didn't feel fear. AI didn't need a rate cut. AI didn't care about the Fed or Swift or liquidations. AI wasn't on Twitter coping. AI wasn't staring at a red candle in disbelief. AI didn't need to catch its breath. Instead, while the world was spiraling, AI leveled up again. Models got smarter, interfaces got cleaner, capabilities expanded, safety cracks got exposed, industries got disrupted. Google and OpenAI kept releasing upgrades like they were patching reality in real time. The scary part? The market melted down, and AI kept marching forward, completely unaffected, completely unbothered, completely indifferent to human emotion. And that's the split we're living in right now. Humans are panicking in the old world, while AI is silently building the new one. And here's where everything finally clicks, the part nobody outside the garage is paying attention to. Because Google and Apple didn't suddenly decide to become best friends. They didn't wake up this morning and say, you know what, let's make file sharing easier for humanity. No, they teamed up because Sam Altman is coming straight for their territory. And then he made the move that told every tech CEO on earth exactly what his intentions are. He hired Johnny Ive, the Johnny Ive, the man who literally designed the iPhone, the iPad, the MacBook Air, the Apple Watch, the entire aesthetic of modern consumer tech. Sam went out and signed the architect of Apple's empire to design an entirely new kind of device, a hardware platform built not around apps, not around screens, not around touch gestures, but around AI. The insider leaks are calling it the iPhone of AI, something new, something different, something that changes the way humans interact with intelligence. That's when it hit me. And this is the same moment it hits anyone who's actually paying attention. I see what the guy is doing. I'm like, okay, he wants the whole field. He doesn't want to compete with Apple. He wants to outrun them, out-invent them, out-design them, out-maneuver them. Sam isn't trying to build the next big app. He's trying to build the next big ecosystem. A world where the hardware serves the model, where the model serves the user, where the user is plugged into an intelligence framework that bypasses the traditional platforms entirely. Apple is used to being the gatekeeper. Google is used to being the operating system. Microsoft is used to owning the desktop. Sam wants to own the future. And that's why Apple and Google stopped fighting each other. Because the second Sam dropped that partnership with Ive, the second he signaled we're building the AI native device, both tech giants realized the same thing. The enemy of my enemy is my friend. This wasn't collaboration. This was survival instinct. AI doesn't sleep. AI doesn't wait. AI doesn't respect the old hierarchy. And Sam just hired the guy who built the last world-changing device to build the next one. The field isn't shifting, it's being replaced. And the garage is one of the few places where people actually see it. Let's keep it real, Garage Gang. If you want to understand how insane this moment is, all you have to do is look at Sora. Because everyone's talking about TikTok, Meta Reels, all these platforms built on people showing off their so-called best moments, birthday dinners, gym sets, fake vacations, highlight clips. It's the whole internet pretending their life is more exciting than it is. And then Sora shows up and basically says, who cares about your highlight moments? How about moments that never even happened anywhere except your brain? That right there is the shift. That's the slap. That's the part Silicon Valley still hasn't emotionally recovered from. Because TikTok is built on your camera roll. Sora is built on your imagination. TikTok asks, what did you do today? Sora asks, what do you want to exist? TikTok films your lunch. Sora creates a universe. And now all of a sudden you see Google and Apple acting real friendly with each other. They're linking AirDrop and QuickShare like they're finally willing to sit at the same lunch table. Let's be honest, that's not innovation. That's survival. That's the enemy of my enemy is my friend energy. Because both of them are staring at Sam Altman and realizing he's coming right for their field. And Sam didn't just build models. He went and hired Johnny Ive, the guy who designed the iPhone, the iPad, the MacBook Air, the Apple Watch, the entire Apple aesthetic. When you hire the architect of the most iconic device of the last 20 years to build your AI native hardware, you're not playing to compete, you're playing to replace.
That's when it hit me. You look at the move Sam's making and you realize exactly what's going on. The man doesn't want to win a lane, he wants the whole field. He wants the OS, the hardware, the intelligence, the interface, the distribution, the ecosystem. Apple controlled the last era because they built the device that defined the era. Sam wants to build the device that defines the next one. And while humans were panicking, sweating, liquidating, doom posting, AI was over here leveling up like it didn't even notice the fire. Google dropped Nano Banana Pro and instantly made half the design world question their career choices. Replit is generating full UI layouts from a sentence. Quickshare is dissolving borders. ChatGPT group chats are turning AI into a team member. Claude is getting hijacked into cyber espionage. A teddy bear is giving answers so wild it got pulled from shelves. Humans are collapsing. AI is ascending. And every big tech giant knows it. That's why Apple and Google aren't acting bold anymore. They're acting nervous. Because Sora didn't just upgrade video. Sora upgraded reality. And in the middle of all this chaos, the garage is one of the few places that actually sees what's happening. Because while the rest of the world is still filming their lunch and posting day-in-the-life videos like anyone cares, the future has already moved on. It stopped recording moments. It started creating them. And once people get a taste of that, everything changes.